Hey everyone, welcome back. ARVL announces $300 million in investment from Westwood Capital. British automaker ARVL is unveiling a $300 million equity financing line established with Westwood Capital. A shareholders' extraordinary general meeting was held to vote on the resolutions such as a reverse stock split and a capital reduction. Further information regarding these developments can be found in the Business Update webcast hosted on the 13th of March via ARVL Investors Relations. Now, thankfully, we do have a quote from the CEO, and I quote, "I've come into the business as a CEO at a critical time. ARVL has developed innovative technology and know-how which position us strongly to address the considerable EV market opportunity. We have now taken important steps to help us take advantage of this opportunity, including raising additional capital, as well as placing a sharper focus on key U.S. markets and driving significant efficiency improvements. Now, looking forward, we will continue developing and validating our vehicles this year. We're also progressing with encouraging conversations and potential partners and investors to affect the next stage of the business plan, bringing vans into production in Charlotte in late 2024. This was the comment that was made by the ARVL CEO, Igor Torgov. Now, additionally, we've got business development. Now, something I do want to add, we haven't spoken about ARVL in quite some time. Now that we know where the business is heading, they are considering a reverse stock split, which I think would be a smart idea if I'm being completely honest, because this is a stock that's on the New York Stock Exchange. The price of this stock should not be below 12 cents. The price of this stock should not be below $1. On the New York Stock Exchange, it's a common rule that the share price should not be below $1, which it is right now. So they need to reduce the overall supply of stocks in order to raise the price of the current share. The share price is 12 cents. The market cap is $96 million. So if someone were to buy this company, they could buy it right now for roughly around $96 million if they wanted to do a hostile takeover, I suppose. Now, the shares outstanding, 763 million. So ideally, they're looking to reduce that supply by quite a lot in order to increase the price of the share. They're probably looking to reduce that below 100 million shares, if I'm being completely honest. The public float of shares is 260 million share. Now, the thing is that if ARVL is planning to build vehicles in the Charlotte factory in the US in I believe it's late 2024. That's a long time to wait, if I'm being completely honest. It truly is a long time to wait. So the problem is there's no real incentive for anyone to invest in a company right now. There isn't, if I'm being completely honest. Now, within the last 6 months, we had a huge pump in the market for this share. It actually rise up to roughly around 63 cents in January. That was incredible. But naturally, we can see that did not last that long. So as for business updates, over the past few months, the company has taken steps to reduce its headcount and cash burn. At the same time, it has set sights on producing a purpose-built Class 4 XL delivery van in Charlotte factory by late 2024. But that depends on securing additional fundings this year. Additionally, they have been successful in increasing operational excellence and generating up to 350 million of new capital commitments and reducing their net debt by 121.9 million. As a result of these efforts, the key element of their business plan are as follows. The company is lowering its current cash spend to below 35 million each quarter, which will reduce the necessary investment to keep the business running this year. In Q1, they're cutting their global workforce by half, leaving up to 800 employees by March 2023. Furthermore, 10 vans will be built at their Bicester factory in order to progress highly automated factory processes and integrate them with their autonomous mobile robots. These vans will cover 250 kilometers of public road mileage for engineering validation purpose by 2023. Additionally, they'll be continuing to develop the van for US market, which offers more expensive average selling prices, higher margins, and tax credit than its counterpart, requiring a dedicated capital rise for production in Charlotte being target for late 2024. So we would have to wait approximately almost 2 years before these vans start being mass manufactured. Wow, that's quite a while. Now, I do like the idea that they will build 10 vans in the Bicester factory in the UK, and that's just for testing, road testing, and various other things. That's excellent. Now, for the XL delivery van, funding activities are geared towards the launch of production in Charlotte for next year. There won't be any capex commitment until dedicated capital is raised. ARVL anticipate raising the quarterly 35 million burn rate by second half of 2023. And with available resources and measures to limit working capital, it appears that sufficient liquidity will be secure to maintain operations into late 2023 without needing investments from XL production. Now, as for more information on the reverse stock split, this is where it gets even more interesting. Shareholders on April the 6th this year, they will have a discussion on a proposed reverse stock split at a considerable ratio between 30-1 or 50-1. That is quite a lot. So we could see the supply of ARVL shares being reduced to 30 million, 50 million, 40 million. Like, if approved, this positions the company to regain compliance with the NASDAQ minimum bid requirement for ordinary shares trading above $1 for 10 consecutive business days prior to May the 1st. Shareholders will also be asked to vote on capital reduction to 156.5 million without cancelling or paying out any shares, setting the par value of ordinary shares around 0.002 each before the split. Those who own a share of the company as of March 28, 2023 are eligible to make their decisions on these resolutions. And as for going ahead, at the end of December, the firm had 205 million in cash. Afterwards, a deal involving a larger bondholder and Taro was announced, including up to 50 million in extra capital commitments. Additionally, a 300 million equity financing agreement with Westwood Capital came out quite recently. In January, further business restructuring was unveiled with workforce decreased to less than 800 people and cost-cutting steps that are expected to bring quarterly cash burns to a maximum of 35 million. Lastly, the company approved a new business plan based on these targets, as well as concentrating production on US market at Charlotte in 2024. So as of December 31st, 2022 last year, the company lacked enough cash to operate for the year ahead. To mitigate the adverse effects, it has taken steps to cut costs and secure capital post-year end. It believes that it will be able to maintain operational activities through late 2023, while searching for additional investments to manufacture vehicles in late 2024. This includes prototyping tooling, expenditures, promises, and working capital. Despite these mitigating measures, there are still concerns surrounding its ability to continue as going concerns due to needing further funding resources. Thus, the board conclude that its unaudited finance data is accurately listed with an ongoing concern bias, without any necessary changes, of course. So, there you have it, ladies and gents. ARVL will take a vote on a reverse stock split, which is quite exciting for me, if I'm being completely honest. I really do look forward to seeing what will happen. What do you think? Do you think they will do a 30-1 stock split, or do you think they will do a 50-1 stock split? The 30-1 stock split is perhaps just to get it to a little bit above $1, just to get it a safety net. However, the 50-1 stock split is perhaps to exceed that, so it can stay above $1 for as long as possible for the next foreseeable future until the company starts to manufacture more and garner more investment. And they desperately need more investment. I think the share is undervalued right now. I think the technology that the company has developed, all for 94 million in market cap, yeah, I think for certainty, it is what I would call undervalued, to say the least. So that is it for today. Hope you all enjoyed this video. Thank you for watching. Subscribe to see more, and leave a like, leave a comment, and I'll see you in the next one. And remember to subscribe to our newsletter. Link is in the description below, of course, and check out our Monument website. I'll see you in the next one. Peace.